Hi guys, good evening. Welcome to another session of Economics for SEBI Grade A 2025 examination. So we had started the discussion in the last class. So this is going to be the class second for the top MCQ series of economic component of your SEBI Grade A 2025 examination. So यहाँ पे as you know the rules कि यहाँ पे we are going to discuss 20 questions again. So most important 20 questions again we will be covering in this particular session as we have discussed in the class first itself. ठीक है, so class second में भी we will be discussing the 20 most important MCQs. So let's start without wasting much time, but you know the rules कि first we discuss the achievers question, which is nothing but the homework question of the last session, and those who have given the right answer of this question, guys, I would be mentioning their name in this class itself. So question for achiever was in the previous session, that is identify the correct statements about factor causing shift in the demand curve. Statements are: an increase in the price of a substitute good can shift the demand curve for a commodity to the right. A fall in the price of a complementary good can lead to a rightward shift in the demand curve, and a change in the number of buyers in the market can cause a shift in the demand curve. So options are first and second only, second and third only, second and third only, first and third only, first, second and third only. Yes, guys, do let me know. What is the right answer according to you here? What is the right answer, guys? So right answer is option number D, that is first, second and third. All the statements are correct here. That is an increase in the price of a substitute good can shift the demand curve for commodity to the right. Right, तो यहाँ पे जब substitute good के prices बढ़ेंगे तो उसका जो main goods है उसकी जो demand है वो basically क्या होगी, demand और बढ़ेगी यहाँ पर. ठीक है, so demand इसकी जो है this is the demand curve. ठीक है, जो demand है वो basically यहाँ पर rightward shift होगी. So this is the right statement. Then a fall in the price of a complementary good can lead to a rightward shift in the demand curve. Yes, यहाँ पे अगर complementary good के prices कम हो रहे हैं तो जो main commodity है उसकी जो demand है वो बढ़ेगी, and that will lead to the rightward shift in the demand curve. Also, a change in the number of buyers in the market can cause a shift in the demand curve. Yes, जब number of buyers यहाँ पर change होंगे, so demand curve definitely यहाँ पर shift होगा. Number of buyers बढ़ेंगे तो demand बढ़ेगी, number of buyers कम होंगे, so demand will go down, and that is why all the statements are correct. जो यहाँ पर जिन्होंने सही आंसर दिया, दैट इज निश. सो निश हैज गिवन द राइट आंसर, देन संदीप हैज गिवन द राइट आंसर, एंड म्याओ जैन हैज गिवन द राइट आंसर. सो congratulations guys, you have given the right answer here. And if you want to see your name here in this achiever slide, guys, so at the end of the session I will again be giving you achievers question. So if you would be answering them correct, then your name will be reflected in the next session. Right now, so start the today's agenda. So today's agenda is question number first. What does nominal GDP represent? Options are GDP adjusted for inflation using the CPI, that is Consumer Price Index. GDP measured in current prices without adjusting for inflation. GDP adjusted for seasonal variations in economic activity. GDP adjusted for the size of the population, and GDP adjusted for international trade balances. Tell me, what is the right answer according to you in the chat box? Yes, guys, everyone, what is the right answer here in the chat box? Do let me know. So right answer is option number B, that is GDP measured in current prices without adjusting for inflation. So what we do here, यहाँ पर हम क्या करते हैं, यहाँ पर simply हम calculate करते हैं nominal GDP by using the current year of output, right? So current year output, and that is multiplied by the current year prices, right? So we get the figure of nominal GDP, current year prices. Yes, so Shasti is saying option number A. Option number B is the right answer. Right, so here you can see nominal GDP is the money value of all final goods and services produced in a year. This money value is obtained using the current year current prices of final goods and services produced. So यहाँ पे current year का output, and that is multiplied with the current year prices. Question number second is, what does real GDP measure? Options are GDP measured in current prices without adjusting for inflation, GDP adjusted for seasonal fluctuations in economic activity, GDP adjusted for changes in the size of the population, GDP adjusted for changes in the value of the currency relative to other currencies, GDP adjusted for inflation reflecting changes in the quantity of goods and services produced. So tell me, Yes, Shastri, I'm saying this, the real GDP. This is the real GDP. Tell me what is the right answer according to you? Guys, everyone, you all have to participate. Okay. So, Thena Muthanaf is saying option number E. Okay. Guys, everyone, do let me know. What do you think? What can be the right answer? Make this session interactive. Do not worry about the wrong attempt because this is not your actual examination. These sessions are conducted so that you can gain confidence, you can enhance your knowledge, and you can commit mistakes as well because you are not supposed to commit mistakes in the actual examination. So that is why we are conducting these sessions so that it will fulfill all these purposes. Yes. What is the right answer, guys? Right answer is option number E, that is GDP adjusted for inflation, reflecting changes in the quantity of goods and services produced. So in the case of real GDP, we actually take the base year prices, right? We actually take the base year prices and that is multiplied with the current year of output. Why? So that we can track whether whatever GDP's figure that we have been observing, that is because of the actual increase in the production or it is just because of the inflation, right? So in order to track this, we have to take the base year prices and the current year output as usual we take into account and with the help of this GDP, real GDP is measured here. So real gross domestic product is a macroeconomic measure of the value of economic output adjusted for a price changes. Question number third. What does per capita income represent? So options are the total income earned by a country's government, the average income earned per person in a household, the income earned by a country's labor force, the total income earned by a country's residents divided by its population, and the income earned by a country's businesses. Yes, everyone, do let me know what is the right answer, guys. What does per capita income represent? Yes, guys, do let me know. Sasti, हाँ जी बताइए. What do you think? What can be the right answer here? So right answer is option number D, that is the total income earned by a country's residents divided by its population. ठीक है. So national income divided by total population, and this gives the figure of per capita income. And per capita income, total population, per capita income is an average income. This doesn't mean कि everyone is earning this much income, but this is an average income, right? जैसे हम average निकालते हैं, so this is the average income that we calculate in the context of an economy. Question number fourth is, what does the GDP deflator measure? Options are the ratio of a nominal GDP to real GDP, the total value of goods and services produced in an economy, the difference between GDP and GNP, the purchasing power of a currency relative to a base year, or none of the above. Yes, read the question carefully, guys. We are talking about the GDP deflator, and it is a request that please mention the question number in the chat box so that I don't get confused कि आप किस question को यहाँ पर refer कर रहे हैं. Kindly mention the question number. Okay. So Muthanab is saying that option number first, that is the ratio of nominal and real GDP. Okay. Yes, guys. Anyone else? Sasti is saying option number A. Yes, right answer is option number A only. That is the ratio of a nominal GDP to real GDP. So when we talk about the GDP deflator, so GDP deflator is used to measure the inflation in the economy, right? It is used to measure the inflation. It is used to measure the inflation in the economy. So nominal GDP divided by real GDP multiplied by 100, right? So this is how basically we measure the inflation. So the GDP price deflator is a measure of inflation. It is the ratio of the value of goods and services in an economy produces in a particular year at a current prices to that of the prices that prevailed during the previous year. Look, question can be asked in the examination that what is the use of GDP deflator? Why GDP deflator is used? So that you must know that it is used to measuring the inflation. Secondly, they can ask the formula of GDP deflator, and this is a very common question, like per capita income, like GDP deflator. These all are very important concepts that are always asked in the examination. So you have to be prepared in terms of that. Question number fifth is, what is disinflation? So options are a decrease in the general price levels of goods and services, an increase in the general price level of goods and services at a faster rate, a decrease in the rate of inflation, an increase in the general price level of goods and services at a slower rate, or a situation where inflation is accelerating? Yes, guys, tell me what is the right answer according to you. We are talking about the disinflation. Read the term carefully. It is disinflation, not the deflation, right? So people often get confused between deflation and the disinflation. But right now we are discussing about the disinflation. Yes. So Mutanab is saying option number D. Okay, guys, what about others? You all have to participate. Make this session interactive. Again, I would request you, because these sessions are conducted to enhance your knowledge. ठीक है, यहाँ पे if you attempt wrong, no one is going to punish you, no one is going to give you a negative marking here. ठीक है जी, this is just for your practice. Sasti is saying option number C. So right answer is option number C here. That is a decrease in the rate of inflation. So when we talk about the disinflation, so disinflation is the decrease in the rate of inflation, right? Decrease in the rate of inflation, which means what is happening here? Suppose inflation is, you can say, a 5%, right? Suppose inflation is 5%. Later on it goes to 3%, which means there is still an inflation in the economy, but the rate of inflation has decreased. So this is disinflation, right? Still inflation is there in the economy, but the rate has decreased. The rate of inflation has decreased, and this decrease in the rate of inflation is known as the disinflation. So disinflation is the process of slowing the rate of inflation, meaning that prices are still rising but at a slower pace than before. Question number 6 is, which of the following best describes deflation? Now we are talking about the deflation. So options are a decrease in the general price level of goods and services, a decrease in the rate of inflation, an increase in the general price level of goods and services, an increase in the rate of inflation, or a constant price level of goods and services over time. Yes, kindly mention the question number, guys. Please mention the question number. Yes, please tell what is the right answer. What do you think? What can be the best description of deflation? Okay, so Sasti is saying option number A. Okay. Yes, guys, everyone, you all have to participate. Do let me know. Yes, so right answer is option number A only. That is a decrease in the general price level of goods and services. So what is inflation? Inflation is an increase in the general price level of goods and services, and exactly opposite is the deflation. That is a decrease in the general price level of goods and services. And I hope now you got the difference between deflation and the disinflation. Disinflation is the decrease in the rate of inflation, whereas when we talk about the deflation, so that is a decrease in the general price level of goods and services. Got it? So here is the explanation part that you can read, that deflation refers to the phenomena where the overall price level of goods and services in an economy declines over a period of time. So overall price level goes down over the period of time, and this phenomena is known as the deflation. Question number 7 is, what is skewflation? Guys, these terms are very, very important and often asked in the examination. Deflation, disinflation, skewflation, right? Hyperinflation, core inflation. These are very common terms which are asked in the examination. So tell me, question number 7 is, what is skewflation? A general decrease in the price level of goods and services across the economy, an increase in the general price level of goods and services across the economy, an increase in the prices of some goods and services while the prices of other remain stable or decrease, a decrease in the rate of inflation, or a situation where inflation is uniformly distributed across all sectors of the economy. Yes. What is the right answer, guys? Please do mention the question number as well. So right answer is option number C here. That is an increase in the prices of some goods and services while the prices of others remain stable or decrease. So suppose what is happening. Yes, Sasti, you have given the right answer. What is happening? Suppose only 10 goods are produced in the economy, right? Just take an example. Suppose only 10 goods are produced in the economy, out of which, if suppose the prices of 7 or 8 goods are going up, in that case, this is the inflation, right? This is the inflation. Or suppose if the prices of most of the goods and services are going down, that is the deflation, right? But imagine the scenario where what is happening, where the prices of few goods and services or the few group of service goods and services are going up, whereas the prices of others remaining stable or decrease, then that phenomena is known as skewflation, right? That phenomena is known as skewflation, jahan par what is happening, only the prices of few goods or prices of small group of commodities are increasing, and rest of the goods are either remain stable or as well as their prices are decreasing. Then in that case this phenomena is known as skewflation. So skewflation refers to a situation where inflation is not evenly spread across different sectors of the economy. Instead, certain goods and services experience significant price increases while others remain stable or even decrease in price. This creates a skewed or uneven inflation pattern. Skewflation can occur due to various reasons such as supply chain disruptions affecting specific industries, changes in consumer preferences, or sector specific shocks. Question number 8 is, which of the following best describes reflation? Right. So options are a general decrease in the price level of goods and services across the economy, an increase in the general price level of goods and services across the economy, an increase in the prices of some goods and services while the prices of other remain stable or decrease, a government policy aimed at increasing the level of output and inflation to counteract deflationary measures, and a situation where inflation is uniformly distributed across all sectors of the economy, guys. Yes, tell me what is the right answer, reflation? Question number 8, guys, do let me know what is the right answer here. So right answer is option number D, that is a government policy aimed at increasing the level of output and inflation to counteract deflationary pressure. तो जब भी इकोनॉमी डिफ्लेशनरी प्रेशर से गुजर रही होती है, उसको काउंटरैक्ट करने के लिए गवर्नमेंट क्या करती है, गवर्नमेंट यहाँ पे लेवल ऑफ आउटपुट को इंक्रीज करती है, ठीक है। इंक्रीज करने के साथ साथ यहाँ पर क्या होता है कि उस डिफ्लेशनरी प्रेशर से हम बाहर निकल कर आ जाते हैं. सो रिफ्लेशन रेफर्स टू द इकोनॉमिक पॉलिसीज एंड मेजर्स इंप्लीमेंटेड बाय गवर्नमेंट एंड सेंट्रल बैंक्स to stimulate an economy that is experiencing deflationary pressures or recession. The primary goal of reflation is to increase the level of economic output and drive up the general price level to prevent deflation, which can lead to reduced consumer spending, lower business profit, and increased unemployment. Clear? Question number 9 is, what is stagflation? So options are a period of high inflation combined with high unemployment and stagnant demand in a country's economy, a period of high economic growth with low inflation and low unemployment, a period of deflation with high economic growth and low unemployment, a period of moderate inflation with a high economic growth and low unemployment, or a period of low inflation combined with low unemployment and strong demand in a country's economy. Tell me. Tell me, guys, what is the right answer? Yes, so Shasti is saying option number A, Parth is saying option number A, right? Okay, so everyone is saying option number A. So option number A is correct here. That is a period of high inflation combined with high unemployment and stagnant demand in a country's economy, right? So this is the stagflation, जहाँ पर क्या हो रहा है कि high, there is an stagnation also, there is an inflation. So this is a combined term of stagnation plus inflation, right? So that makes the total of stagflation. Got it? That is why option number A is correct here. Stagflation is an economic condition characterized by the simultaneous occurrence of stagnation and inflation. This scenario is particularly challenging for policymakers because it combines the negative aspects of both inflation as well as reflation. Question number 10 is, which of the following best describes the effect of inflation on lenders and borrowers? So options are lender benefit and borrowers suffer, borrowers benefit and lenders suffer, both lenders and borrowers benefit equally, neither lenders nor borrowers are affected, the effect on lenders and borrowers is unpredictable. Tell me. What is the right answer, guys? What do you think? What can be the right answer here for this question? So, Muthana is saying option number B. Okay. What about others? Right answer is option number B, that is borrowers benefit and lenders suffer. Right. So inflation erodes the purchasing power of money. Read this carefully. That inflation erodes the purchasing power of money for lenders. The money they are repaid has less purchasing power than what they when they initially lent it out, leading to a loss in real value. Conversely, borrowers benefit because they repay their debts with money that is worth less than what they borrowed it. This redistributes wealth from creditors to debtors. When inflation falls, the opposite happens. Lenders benefit as the real value of money increases, while borrowers suffer because they have to repay their debts with money that is worth more. Question number 11th is, how does the CRR help in controlling inflation? That is cash reserve ratio. How does cash reserve ratio help in controlling inflation? Options are by increasing government spending, by reducing interest rates, by lowering import duties, by increasing the amount of money banks must hold in reserve, or by subsidizing exports. So you might have heard about the term cash reserve ratio. So do let me know how does CRR help in controlling inflation? किस तरीके से सीआरआर यहाँ पे हेल्प करता है इन्फ्लेशन कंट्रोल करने में? So right answer is option number D, that is by increasing the amount of money banks must hold in reserve. So what is CRR? Cash reserve ratio is a percentage of net demand and time liabilities which commercial banks have to keep with the Reserve Bank of India. Right. So what is happening when RBI is increasing this percentage? So what would happen now? Banks need to keep more funds with the Reserve Bank of India, and they would be having very less funds to lend to the public. So that will lead to the decreased liquidity in the system, and that will lead to the increased interest rates, which further leads to the decrease in demand, and that will control the inflation. So the CRR is a tool used by the Reserve Bank of India to control inflation by managing the amount of funds available in the banking system. At times of high inflation, the RBI increases the CRR, which is the percentage of a bank's total deposits that must be held in reserve and cannot be lent out. By doing so, the amount of money that banks have available to lend is reduced. This decrease in the lending capacity of banks leads to a reduction in the money supply in the economy, curbing excessive spending and investment, and thereby helping to control inflation. By effectively reducing the liquidity in the market, the RBI can moderate demand side pressures, helping to stabilize prices and controls, right? So option number D is the right answer. Yes, Parth has given the right answer. Muthunav and Sasti, you all have given the right answer. Question number 12 is, how does the CRR help in boosting growth? CRR किस तरीके से growth को boost करता है? Options are by increasing import tariffs, by reducing government subsidies, by lowering the CRR, allowing banks to lend more, by implementing stricter tax policies, or by increasing the reserve requirements for foreign exchange. So how can the CRR help in boosting growth? Tell me. So Muthana is saying option number C. Okay, what about others, guys? Yes, Parth is saying option number C. राइट आंसर इज ऑप्शन नंबर सी, दैट इज बाय लोअरिंग द सीआरआर, अलाउइंग बैंक्स टू लेंड मोर. तो यहाँ पर क्या हो रहा है? यहाँ पर जब सीआरआर कम होगा, राइट, व्हेन सीआरआर विल गो डाउन, व्हिच मींस कि नाउ कमर्शियल बैंक्स नीड टू कीप लेस कैश विद द रिजर्व बैंक ऑफ इंडिया, राइट, व्हिच मींस दे आर हैविंग मोर कैश, दे आर हैविंग मोर फंड्स टू लेंड टू द पब्लिक, एंड दैट विल इंक्रीज द लिक्विडिटी इन द सिस्टम. जब लिक्विडिटी बढ़ेगी, सो इन दैट केस इंटरेस्ट रेट्स विल गो डाउन. इफ इंटरेस्ट रेट्स आर गोइंग डाउन, देन पीपल विल डिमांड मोर, बिकॉज नाउ दे कैन बाय आईफोन 17 प्रो मैक्स, दे कैन बाय फ्लैट, they can purchase AC, sofa, TV, washing machine, car, bike, and whatnot, right? So because now the loan is cheaper for them, so demand will increase, and that will lead to the increase in the production in the economy, and this is nothing but the boosting economic growth. Question number 13th is, how can the statutory liquidity ratio help in controlling inflation? SLR help in controlling inflation. So options are by reducing import tariffs, by increasing government spending, by lowering the interest rates on saving accounts, by requiring banks to hold up a higher percentage of their deposits in liquid assets, by increasing the number of bank branches. What is the right answer, guys? Parth is saying option number D. Uttanab is saying option number D. Yes, so right answer is option number D. That is by requiring banks to hold a higher percentage of their deposit in liquid assets. So what is happening here in the case of SLR? SLR is basically, that is again a percentage of net demand and time liabilities which commercial banks have to keep with themselves only, right? So they have to keep it aside, which they cannot use. If they are using it, then penalty would be imposed by the Reserve Bank of India. Right. So SLR can help in controlling inflation by requiring banks to hold higher percentage of their deposits in liquid assets. So now if RBI is increasing the SLR, which means now what would happen, that commercial banks need to keep aside higher proportion of funds, which means they would be having less funds to lend to the public, which means liquidity will be less in the banking system, right? And that will lead to interest rates to go up. That will further lead to demand will go down, because at now the loan is very expensive, so people will decrease their demand, people will postpone their demand, because they wanted to purchase iPhone 17 Pro Max, a flat car, bike, etc. So they will reduce their demand because loans are very expensive, right? And this will lead to decrease in the price, and that is nothing but the controlling inflation. Question number 14th is, what is repo, that is repurchase option in the context of banking? So options are a long-term loan given by commercial banks to the government, a tool used by banks to invest in foreign exchange markets, a collateralized lending arrangement where banks borrow money from the Reserve Bank of India by selling securities with an arrangement to repurchase them, a method used by the RBI to control the exchange rate of the rupee, and a fixed deposit scheme offered by the commercial banks to their customers. Tell me what is the repurchase option. So Parth is saying option number C. Please mention the question number so that I can better understand. Muthunav is saying option number C. Yes, so right answer is option number C. That is a collateralized lending arrangement where banks borrow money from the RBI by selling securities with an arrangement to repurchase them. Right. So in the repo, what is happening? In the repo, this is a suppose on one hand there is a Reserve Bank of India, on another hand there is a Punjab National Bank. If PNB is in the need of the funds, so PNB can approach the Reserve Bank of India and RBI will give it a loan. ठीक है, यहाँ पे loan देगी, and against that RBI would be charging here what? RBI would be charging here interest. So this is the rate at which RBI gives loan to the commercial banks. And apart from that, Punjab National Bank has to keep the collateral of government securities, right? And whenever the loan would be repaid, the government securities can be bought back. So repo or repurchase option is a short-term borrowing mechanism used by banks to meet their immediate liquidity needs. In a repo transaction, banks sell securities to the Reserve Bank of India with an arrangement to repurchase the same securities at a predetermined rate and date. This arrangement is collateralized, meaning the securities act as collateral for the loan. The predetermined rate at which the repurchase takes place is known as the repo rate. Question number 15 is, what does a high repo rate signal in the context of banking? Options are, banks will have more funds available for lending, banks will reduce interest rates on loan, access to money is expensive for banks leading to lesser credit flow into the system, banks will increase their investment in foreign assets, or banks will decrease their reserve requirements. Tell me, what does a high repo rate signal in the context of banking? Yes, friends. So Parth is saying option number C. Muthunav is saying option number C. Okay. So right answer is option number C. That is, access to money is expensive for banks, leading to lesser credit flow into the system. So when RBI is increasing the repo rate, which means if now commercial banks are taking loan from the Reserve Bank of India, so they have to pay higher interest rates, which means access to money is expensive for banks. So what that will lead to? That will lead to lesser credit flow into the system, because now banks will avoid banks will start avoiding taking loans from the Reserve Bank of India. So that will lead to lesser credit flow into the system. So a high repo rate signals that borrowings money from the Reserve Bank of India is expensive for commercial banks. As a result, banks will be less inclined to borrow funds due to the higher cost associated with the repurchasing the securities they use as a collateral. Consequently, with higher borrowing cost, banks will have less money to lend out to businesses and consumers. This reduction in available credit leads to lesser credit flow into the system, which can help to curb inflation by decreasing consumer and business spending. Thus, a high repo rate is a tool used by the RBI to control the money supply and manage economic stability. Question number 16th is, what does a high reverse repo rate implies for banks? High reverse repo rate, right? Keep the question, read the question carefully. Options are: banks will only lend money to borrowers. Banks will only park their money with the Reserve Bank of India. Banks will not park their money with the RBI. Banks may either park their money with the RBI or lend at a higher rate to borrowers. Banks will reduce their overall lending activities. Yes, what does a higher reverse repo rate imply for banks? Yes, so Parth is saying option number D. Mutanab is saying option number B. Okay. Yes, guys. Anyone else? Please do let me know. So right answer is option number D here. That is, banks may either park their money with the RBI or lend at a higher rate to borrowers. So what is happening if reverse repo? What is the meaning of reverse repo? So on the reverse repo, suppose on one hand there is a Reserve Bank of India, on another hand there is a Punjab National Bank. So if Punjab National Bank is having excess cash, so they can deposit it with the Reserve Bank of India. Obviously, there would be some interest rates, right? Otherwise, they would have not deposited. So they would be depositing their funds with the RBI against the interest that RBI would be giving them. So what would happen here in this case? So in this case, if RBI is increasing the reverse repo, then banks will obviously be motivated to keep the fund with the RBI. So they have two options: either they can keep their money with the RBI, or they can lend to the borrowers at a higher rate, right? So both options are open for the banks, and hence option number D is the right answer here. So a high reverse repo rate is the interest rate at which the RBI borrows money from commercial banks. When the reverse repo rate is high, so it provides banks with an attractive low risk option to earn returns on their excess funds by depositing with the RBI. This is considered a safe investment because it involves lending to the central bank. However, banks also have the option to lend money to borrowers such as businesses and individuals at a higher interest rate than the reverse repo rate. This would potentially provide banks with higher returns, though it comes with higher risk compared to the virtually risk-free return from the Reserve Bank of India. Question number 17th. Which of the following statements correctly describes the positioning of MSF in the interest rate corridor set by the Reserve Bank of India? So options are: MSF represents the lower band of the interest corridor with the repo rate at the middle and the standing deposit facility as the upper band. MSF represents the upper band of the interest corridor with the repo rate at the middle and the standing deposit facility as the lower band. MSF represents the middle band of the interest corridor with the repo rate as the upper band and standing deposit facility as the lower band. MSF is not a part of the interest corridor and is independent of the repo rate and standing deposit facility. And MSF represents both the upper and the lower band of the interest corridor with the repo rate as the middle band. Yes, tell me. Question number 17th. What is the right answer here? So right answer is option number, yes guys, option number B is the right answer. That is, MSF represents the upper band of the interest corridor with the repo rate at the middle and the standing deposit facility as the lower band. So what is happening here? यहाँ पे suppose there is a repo, right? Repo. So repo is 6% for example. So MSF will be 6.25% because it is 25 basis points higher than repo rate, and HDF will be 5.75% because it is 25 basis points lower than repo rate. So this is how MSF is at the top, repo is at the middle, and SDF is at the lower level. Question number 18th is, what is the effect of the RBI purchasing securities on the economy as a part of open market operations? Options are: it reduces the money supply and decreases demand in the economy. It increases the money supply, leading to more demand and potentially higher economic growth. It stabilizes the money supply without affecting demand or economic growth. It only affects the interest rates without altering the overall money supply, or it leads to a decrease in economic growth by withdrawing money from the market. Yes, what is the effect of RBI purchasing securities on the economy as a part of open market operation? Please tell. So right answer is option number B, that is it increases the money supply leading to more demand and potentially higher economic growth, right? So whenever RBI is purchasing securities, which means RBI would be injecting funds into the system, and when funds would be higher, it will increase the money supply, and that will lead to more demand and potentially higher economic growth. Got it. So when RBI purchases securities, it injects money into the economy, and this action increases the money supply as the RBI gives money to sellers of the securities. With more money available in the economy, banks have more funds to lend, which can lead to increased consumer and business spending. This rise in demand can contribute to higher economic growth. By purchasing securities, the RBI aims to stimulate economic activity and manage liquidity in the market, thereby supporting overall economic growth. Question number 19 is, which of the following actions represents an expansionary monetary policy in India? Options are increase the CRR, selling the government bonds in the open market, increase the SLR, reducing the repo rate, or increase the marginal standing facility rate. Guys, when we talk about the expansionary monetary policy, which means money supply has to be increased. If money supply is increasing, then in that case, what would happen? Obviously, interest rates will go down, demand will go up, and that will lead to the increased production in the economy. So tell me, which of the following action represents an expansionary monetary policy in India? Yes. So right answer is option number D here. That is reducing the repo rate, right? So in the case of increased CRR, that will not lead to the expansionary monetary policy. Selling government bonds, that will basically absorbing the liquidity. Increased SLR, that will lead to less funds available with the banks to lend to the borrowers. Then reducing the repo rate, this will lead to the loan. Commercial banks will take loan from the Reserve Bank of India, right, at the cheaper interest rate, and they would be extending the loan to the borrowers. So yes, this is the right answer. Question number 20th is, which of the following is a component of the contractionary monetary policy used by the Reserve Bank of India to reduce inflation? Options are decreasing the repo rate, purchasing government securities, reducing the reserve ratios like CRR and SLR, and increasing the repo rate, lowering interest rates. Yes, tell me. What is the right answer, guys? So right answer is option number D here. Yes, that is increasing the repo rate. So when a repo rate would be increased, so that will lead to the contractionary monetary policy, right? So contractionary monetary policy, also known as tight money policy, involves measures taken by the central banks to decrease the money supply and raise interest rates to control inflation. One such measure is increasing the repo rate, bank rate, MSF rate. When these rates are raised, borrowing cost for corporations and consumer increase, leading to reduced spending and investment. This helps in cooling down the economy and controlling inflation. So guys, these all are the 20 questions, and this is the achiever question. So those who will be giving the right answer, so right answer you are not supposed to give here. Right answer you have to give in the comment box, not in the live chat box. And those who would be giving the right answer of this achievers question, their name will be reflected in the next session. So question is, which of the following action is an example of expansionary fiscal policy? Options are increasing interest rates, reducing government spending, increasing taxes, lowering taxes and increased government spending, and implementing strict budget cuts, right? So you have to give the right answer in the comment box. Now guys, as you know that NABARD's notification has been released, right? NABARD का notification आ चुका है. So we have also launched the crash course for NABARD Grade A, in which you can get live classes, you can get study notes, MCQs, full length mocks, one-to-one mentorship and whatnot. So you can immediately enroll, guys, because you have very limited time. Around 10 days, around 40 days are left for the examination. So make sure that you are preparing very well for the examination. Link of the course is given in the description. Similarly, the SEBI's notification has also been released. 56 vacancies have been notified for the general stream and 20 vacancies have been notified for the legal stream. So for both the streams, we have launched the course. Single course is there, so you are not supposed to incur cost separately. There is a single course available for both general stream as well as legal stream, right? तो उसका भी आप यहाँ पर preparation कर सकते हैं. As a part of crash course, you will get live classes, updated mocks, study notes, chapter wise practice questions, etc. and one-to-one mentorship, right? So the link of this also is given in the description guys. But apart from that you can simply enroll for the regulatory body super pack. आप इसको enroll कर लीजिए, सबसे best है क्योंकि इसमें आपको सारे एग्जाम्स मिल जाएंगे, आरबीआई, सेबी, नबार्ड, पीएफआरडीए, सेबी, सिडबी एक्सेट्रा सारे एग्जाम्स आपको मिल जाएंगे. So why to incur 10x cost when you have the option to incur 10% cost, right? In this 10% cost you will get the access of all these courses as a part of super pack. The link of this is also given in the description. But if you apply the code here Prakash, this you will get maximum discount, right? सो इरिस्पेक्टिव ऑफ द कोर्स, चाहे वो क्रैश कोर्स हो, नाबार्ड का, सेबी का या आरबीआई का 2026 का कोर्स हो या फिर सुपर पैक हो, इफ यू अप्लाई द कोड प्रकाश, राइट, सो यू विल गेट द मैक्सिमम डिस्काउंट. एंड दिस इज द टेलीग्राम ग्रुप. ये टेलीग्राम ग्रुप है, इसके थ्रू यू विल गेट द all the updates, and also you can ask me any query. Whenever you have any query you can simply ask me over the group. I will be resolving your query. So guys, this is all. Thank you very much. So this is all for with respect to this particular session guys. Thank you very much for watching and listening me. We'll meet in the next session, and make sure that you are answering the achievers question. Bye bye, take care guys.